Hey guys, what's up? Stock Retail coming back to you on just an ever-pressing topic, something that is front of mind for me that I've said I'm going to be talking about for a while, especially once we get to the point where it's really clear we get to celebrate. But speaking of celebrating, had some really great quotes from Adam in an article yesterday. I want to just kind of highlight and bring back to this cash topic of just, how is AMC looking? Obviously, the short thesis has always been AMC would burn too much cash and not be able to survive. The long thesis is nope, we're good to go. We'll have enough cash to get to profits, and then profits themselves will be bringing in the cash. If you followed me, then you know that I've been sort of saying that the road to profits is pretty clear, that I felt that the management team brought in enough cash to, as Adam says, survive, then thrive. I want to just kind of show again that path. I'm going to keep visiting it from a few different lenses. And frankly, I was just so excited about the way Adam talked about it yesterday, about him kind of confirming some things I've been telling you. And so I want to just revisit that, especially, if you're like me, you woke up today, I'm West Coast. So I kind of woke up to market open. You see the red in the market, and that can be discouraging. That can be frustrating. So I come back to the thesis, I come back to the data, and I say, all right, how do I actually feel about the business itself? And I like what I see. And so I just want to show you what I see. Doesn't mean you have to agree with me, but I just want to show you how I'm looking at that from kind of an analytical lens. Just to play on words here, I believe the shorts are going to eat a whole lot of crow, and I'm excited about that movie later this year. So this is going to be a pretty short video today. We're just going to go through, like I said, one more way of looking at cash. So if you look at 2023, last year actuals, you can go fact check this. I'm taking a number called cash from operations. There's a couple different cash numbers I look at. There's another one called free cash flow that's very important. You've seen I include that in the quarterly scorecards I do. When earnings come out, I review the earnings. So you'll see me talk about free cash flow as well. But cash from operations is a nice number because it says, all right, just from the act of kind of having the doors open, or now also selling popcorn and having distribution and candy, just the act of even being in business, what does it do for AMC? So you can see we did have 3 quarters of losses last year. Now Q4 asterisk on that because that was heavily strike impacted. I believe that would have been significantly swung the other way. I've said many times here, just imagine if you had Kraven the Hunter, Ghostbusters, and Dune all added back into that number. You're looking at a very different result there. So that's very heavily strike impacted. But on the full year, we burned $215 million from operations. So that's okay. Let's talk about it. Let's own it. But again, the thesis for me has always been we will outlast the shorts. Think about how even all the way back in 2021, what did we say? I can hold longer than you can stay solvent. And that is my point of view. That's why I'm AMC not leaving. That's why I'm Apes not leaving. Many of you know I have a financial sort of a business background. And so I've analyzed the numbers and they tell me that the thesis still holds. That's why I'm here. So, but let's just look at, okay, so we burned 215 last year. Well, where are we now? So remember, we came in to Q1 of this year. We came out of Q4 last year with $884 million. So that was our cash and equivalents. It's just a number you can find on the balance sheet. Recent dilution, so you know that we had the announcement, we're bringing in another 250 million. So in terms of cash that we know about, that's $1.1 billion, 1,134 million. So as a super rough forecast, and I mentioned I'm just going to fly through today. If you've been around for a while, you know that my forecasts have been pretty darn accurate. This is a very rough forecast. Cash, first of all, is hard for me to forecast. I can forecast earnings pretty well. Cash can be a little more squirrely depending on the timing of certain payments and certain things that come in. But I can give you a range, and so I can give you a real broad range here. The first 2 quarters are still pretty heavily strike impacted. And so let's say we burn another 200 to 400 million basically in those first 2 quarters. So I'm just giving you even kind of an ugly worst case. Let's take that 420 million at the top level, just so Shorty can't say we're going to sandbag or anything here. I'm actually sandbagging to the wrong side. I'm making it look as worse as I believe it possibly will be. That still leaves $714 million at the end of Q2. Okay. And note, I'm not factoring in other debt payments or capital expenditures. So if Adam and team decide there's enough freedom to invest anywhere or pay down some debt, then you would have a different cash number. But I'm talking again here, cash burn from operations. So I'm giving you kind of a worst, just think of it as plan for the worst, hope for the best. I'm not saying this at all is what's going to happen. Don't let me FUD you. I think we could do better than this. I'm just giving you kind of even in a worst case scenario, we come out of Q2. So at the end of June, already all the way to the end of June, we still have like $700 million. And then, from past forecast videos, and I'll review some numbers again soon in more detail, that now towards the bottom, Q3 and Q4 combined, so the entire last 6 months of the year are positive cash flows, in my opinion. So all we've got to do, and not even frankly, I say get to the end of Q2, get to June, but really I've also said that probably somewhere around that time, because you get kind of Memorial holiday movies, you get some good June movies, we'll start having like Inside Out 2 and Quiet Place and some other things like that. Start getting more of those blockbuster movies coming out. So perhaps even June itself already starts to look more positive. But anyway, the entire last 6 months, all we have to do is, survive to June, and then the last 6 months of the year are now contributing back to the company. So that's always been, and that's why in one of the other videos I said, these guys were like a squirrel gathering nuts for the winter when we had dilution last fall. They brought in the cash to get through this strike impact. And now you can just sort of see in the numbers. I'm telling you, even in, I think, a worst case scenario without other spending, that we've got like $700 million left at the end of Q2. You can't quote me on that. Like I said, super rough number, but you just get the idea. Even if I'm off by, geez, a couple $100 million, you'd still have $500 million left. We're going to be fine. And then all of that back half of this year, and then all of 2025 and all of 2026 and on and on and on. And you can see I'm saying, if the back half of this year is positive cash flows, 2025 is like a positive plus level, 2026 is like a positive plus plus. We start growing from there. And just to kind of, give you perspective on that. So here's that article on the right. On the left first is something I had said in a cash flow video I did, if you want a little more detail. Excuse me. I had said, basically, once we get through this, it's smooth sailing. Well, then look over here on the right, Adam said smooth sailing. So certainly we're of a like mind. And then, the second point is, look where he says, here, I'll kind of highlight. The top right, he says, enough cash on hand to get through all of 2024. Well, that's exactly what I highlighted before and what I'm trying to highlight to you today. So when you wake up, like me, and you see red on the price action and like, oh my gosh, and Shorty wants to kind of convince you because the stock price is low, somehow that means AMC will go bankrupt. Well, if we already have the cash to survive and get to a profitable period in our history, then it's already done. And that's what I've also been trying to tell you. And then think about where Adam actually also then says it. He says, I actually think the problem has already been solved. That's literally exactly what I'm trying to tell you guys. He brought in the cash to survive this ridiculously strike-impacted period. It's certainly frustrating that we saw the strike at this moment in AMC's history. It set us back for a little while, but it did not break us. It just delayed our victory. And I still feel very strongly we're headed to victory because we have the cash to survive. The profits are coming. I'm telling you that. Adam's telling you that. So it's just up to you. I've presented it with numbers. Certainly he knows the numbers even better than I do. So the point for me, it continues to be, we're not going bankrupt and we will win. Let's go.